Hey everybody, it's Brian here from alphatrends.net. Today's Friday, the 27th of May, 2016, and we had a very strong week for equities. The theme coming in this past week, as I mentioned, was we were looking for the potential of a failed head and shoulders pattern. And one of my favorite phrases is from failed moves often come fast moves. And that's exactly what set us up for such a big week in the market. The S&P gaining 2.3%, NASDAQ close to 3.5% along with the Russell 2000. And the semiconductors and biotechs were up more than 4.5%. So the only thing that really sold off, the only red we see in the ETFs that I track here each week were in the bonds, which were only down 25 basis points. So let's take a look at the action on the chart. As I mentioned, we came into the week talking about this head and shoulders pattern that seemed like everyone was talking about. And one of the things that I talk about a lot is the direction of the 50-day moving average being more important than closing below it one or two times. And last week I said, from failed moves often come fast moves. Well, obviously that's exactly what we saw happen here this week. And as the market gapped higher on Tuesday, that what I had done is shown subscribers to Alpha Trends first thing in the morning that gaps, when we see them like that in the S&P 500, for instance, this one right here, often tend to lead to a very strong day and several days of follow through after that. So that's exactly what we had here, and we were above a rising 5-day moving average. To me, that means it's dumb to sell short. And I want to just reemphasize what I talk about here each and every week. I talk about the trend from an intermediate term based perspective. It doesn't mean I'm not aware of the bigger picture. I'm always aware of the bigger picture. But the only thing that I want to know is potential levels of support or resistance. And we have this, what's been a little bit of a band of resistance. So perhaps going into next week, we slow down in this area a little bit. It seems that after a big move like that into a potential level of resistance, we could see, little backing and filling, certainly even a pullback down towards the 5-day moving average, which is, coming up rapidly, but it's at 208.5. Even a pullback to there would not be negative for this market in the intermediate term. The intermediate term trend is innocent until proven guilty, as is actually the longer term trend. And yes, as someone pointed out in Wednesday's video, I was bearish over here. That's when prices were going down. I've been bullish for the most part, but not exclusively over the course of this year. When the market is pulling back, then I want to be in the sidelines in cash and waiting for an opportunity. If this market had broken lower, in let's say it had done this, rallied up to that level, and then broken lower, well, then of course I would be bearish on this market. But I have to trade based on what I perceive and be aware of all the potential scenarios, be disciplined enough to be flexible, and know that again, from failed moves often come fast moves. And that again was even the title of my video last week. So anyways, we are up to once again a potential level of resistance. There is no evidence at all that anyone should be selling short if you're a short to intermediate term trader. The intermediate term trend and the short term trend are clearly bullish at this time. What would change that? Well, it would take a lot, and frankly, I don't foresee it right now. But perhaps the market breaks down like this, and then comes back up, and then we see lower highs and lower lows. But right now, it just isn't feasible to think on the short side for me for anything more than an intraday scalp. Not while we have a rising 5-day moving average, and all these other markets are advancing as rapidly as they are, such as the NASDAQ, which had a fantastic week here. We were talking about last week, if you recall, also that I was talking about the potential that this is a big cup, and this being the handle, and that breaking beyond this level would bring us up to the top side of that cup and handle pattern. That, okay, let's say we get up towards here. Would I, so people are trained to buy the breakout on the cup and handle. To me, I think that's foolish, because you have to ask yourself all the time, where has it come from? If it has just come from, let's say, 107 to 111 and then breaks out, that's not the time to buy it. The time to buy it is when it starts to begin its intermediate term uptrend, which was, of course, this week with that gap higher, and we've seen higher highs and higher lows. One thing I think that you want to keep an eye on is the volume weighted average price since this event. So since this event, for instance, in the NASDAQ, you've got it down at about 109. For the S&P 500, the volume weighted average price since the event is at about 209, and we have a 5-day moving average coming up to meet that as well. But back to the daily time frame on the NASDAQ, we certainly have the potential that this is a cup and handle pattern, which is considered bullish. And also, what a cup and handle does is we have a sell-off that runs deep, and then we have another sell-off which shows a higher low, and we see more repeated tests of a prior level of support, or what's becoming resistance. And breaking beyond that is what should be expected in an uptrend such as what we have now. The Russell 2000, same thing. So a little cup and handle in here, maybe not as well formed as the NASDAQ, but we're getting up towards that 115 level. And these are, so basically we closed at new high for the year in the Russell 2000 on a closing basis. And we have the potential that that will become resistance up in there. But if you look at the weekly time frame and see that we've definitely broken this downtrend line. And from a longer term perspective, I think that as long as the long term remains above this higher low right here, then it's innocent till proven guilty. That doesn't mean the intermediate term should be considered innocent till proven guilty, not while we're, not if we start to decline. But where we are right now, of course, is that we are innocent till proven guilty. And so, for instance, the volume weighted average price from this gap is down at 113.5. If that were to fail, I might be looking at something like this, or looking at Fibonacci levels to look for potential retracement areas. But right now, going into next week, there's no reason to be looking for a pullback, but to be aware that it's always possible. The first break that would bring my concern a little bit would be if it were to break below what was Wednesday and Thursday's highs and then became support today. But again, it's innocent until proven guilty. There is no reason to be looking for a short while the intermediate term trend is trending higher. And as we mentioned, the semiconductors are the one that have led the way here. And this group, the semiconductors, we talked about the potential for resistance back in here, but the foolishness of shorting there just because it's potential resistance. Instead, we saw 5 days where the semiconductors have advanced straight after being the leading group, and here you can see that there was no reason to be a buyer above this cup and handle high. The better place to purchase, you should have already been long as it was making this pattern of higher highs and higher lows above a rising 5-day moving average. Of course, it doesn't mean you can't make money on a breakout, but the point is making money and when the trends are aligned and when you have the opportunity to get in with a lower amount of risk. I want these things to keep moving higher, but I think the healthy thing for the semiconductors would probably be to come up towards this 57 level, and maybe even what we see happen a lot of times would be a break, let's say a move up to 57.20, and you got to ask yourself, who buys up there? Who considers that a breakout? The point is, where has it come from? Just in the last couple of weeks, it's gone from 51 to 57. So in advance of, what is that, 12-13%, you don't want to buy a breakout after an extended move. You want to be looking for that and saying, okay, is this now something where the people who bought smart are going to sell into that, and maybe that's where the new shorts come in. The fact is, though, we have an intermediate term uptrend. I've been telling people, you don't short into this. It doesn't matter if you think it's up too much. There is no such thing as up too much if there are still more buyers coming into a market. The biotechs had a good week as well, and they had broken beyond that 50-day moving average in that band of resistance right in here. It looks to me like it's most likely headed for about 290-ish, and if it were to get up towards that level, then perhaps we're looking at another cup and handle here as well. Maybe not as bullish as some of these other ones, is because the primary trend on the weekly time frame, we still have a declining 30 and 40 week moving average, actually 20, 30, and 40, which of course are a 100, 150, and 200-day moving average. So not as bullish there, but obviously it's not something you want to sell short, not while it's above a rising 5-day moving average. That is just a dumb thing to do, to sell short markets that are in uptrends. We spoke about Apple and price targets initially 2 weeks ago at that $97.20 level. And here's the thing: a price objective, not necessarily a target. You want to have a price objective when you get into the trade. That's the basis of a risk-reward trade. But we spoke about this one also being from this failed breakdown came a fast move higher. And I'd mentioned I thought it had the potential to get up to $97.20, where that 50-day, 20-day moving average was. But that doesn't mean sell at $97.20. What I've been saying over and over again for the last several days to subscribers is that you want to raise your stop up underneath these higher lows. As the market moves higher, you raise your stop up. So each time you see the higher high, you go and raise your stop up underneath that most recent relevant higher low, which at this point I would say would be down at about $99 a share for an intermediate term trader. And again, my perspective is always from an intermediate term trend. Let's take a look at the year-to-date volume weighted average price in Apple, because we've gotten back above that. We tested it today, so perhaps Apple's beginning a recovery that can see it hold above that, and it's transitioning into from this failed breakdown came this faster move higher. And once again, Apple shows why, the people who shorted underneath this level, it's okay to short below there. There's nothing wrong with that. But if you don't cover up quickly, this is what happens. The fact is, selling short on a breakdown after the stock had already declined from 112 down to 92. So after a 20-point drop in the course of a month and a half, selling short down there is just not a good idea. Where has it come from? Where does it have the potential to go? And when it breaks back up beyond that level, well, the people who sold short get trapped, and people who had stops that were hit under there, maybe they start to scramble to get back into it. And you have this absence of supply, which then when people come back into Apple, it has a phenomenal rally like this, as it has had for the last 2 weeks. Some other ideas, we're involved in this Computer Associates for subscribers at Alpha Trends. Buying that one as it made the higher high above the 5-day moving average, which is advancing. We're also long Facebook at this point from Thursday morning. We're long shares of Yelp, and some ideas that look interesting going into next week. I think that LNG is one that has the potential to provide some downside opportunity. And of course, as always, the most important thing is risk management. But from the February lows, the volume weighted average price here, you can see we've been stuck below it for the last 6 sessions, or is that about 7? And 3 sessions over here. So the sellers are clearly gaining control. We've got a declining 10, 20, and 50-day moving average, and selling short in this, maybe on a break of this area, absolute worst case stop would go just above this lower high. But again, I don't know what time frame it is that you trade. I might even have a stop just above this lower high. It depends on where what you're comfortable with. A group that looks interesting on the long side are some of the casinos. MGM, for instance, if you look here on the weekly chart, it's got what's looking to be a bullish setup in here. We had seen a couple days of strength and then sideways action. I think that next week you get it back above the highs that we had seen this past week here, up above that 23-ish level. Then a worst case stop goes under here, maybe even a tighter stop somewhere up in here. Or you could take, for instance, a volume weighted average price from the beginning of this little move. So I would most likely, as an intermediate term swing trader, put a stop somewhere around 22.65. Win is another one that looks like maybe this one's setting up for further upside. It had this really nice run over in here, higher highs and higher lows. It started to break down. We had the moving averages cross. loss, and it did nothing for the course of a month or so. But now, of course, you can see we're back above that prior band of resistance, and it's not always an exact number. We had a band of resistance in here, which turned into a band of support. And I think that, looking at Win, I might even buy it on Monday back above today, Friday's high. Absolute worst case stop in my mind would be under here. But again, it depends on what your time frame is. But if you look at, what Win has done, a beautiful stage 4 decline that lasted 2 years. We went to a stage 1 accumulation. Now it's back in a longer term uptrend. Maybe if you're an investor, you're going to buy it with a stop down under here and and look for it to move up towards 150-ish. That's certainly a possibility as long as you can continue to raise your stops up underneath the time frame that's most relevant to you. And at Alpha Trends, I have people say, well, it's too short-term focused. And I said, well, listen, it's the same exact concepts. And if you have questions about longer-term trades, let's discuss those. Stocks like Monster Beverage, this one had been a fantastic winner. It looked like it was breaking down. And from this failed breakdown came this fast move higher. And that's where you see a lot of opportunity often is after a failed move. So since this gap higher, our volume weighted average price, you can see we're holding above it. Since this gap here, we're fighting it now. And that tells me that the buyers are gaining back some control. And it looks to me like if Monster can get back above, let's just tighten this up so we can see the scaling a little bit better. But if you can get Monster back up above these, this little band of resistance near 151, absolute worst case stop in my mind would be at about 149 and a half, and looking for this one to possibly head up towards 160. So what's your time frame? That's what I help people with each day at Alpha Trends. Another one that looks decent is Visa. Visa, longer term, it's been in this phenomenal uptrend. And on the daily time frame, we've got kind of what we were talking about in those indexes. We've got a cup and a handle. Do you want to buy the breakout over here? I'd rather buy a breakout beyond the high that we'd seen this week, and then look for it. Maybe you add to it, or maybe you take a 2-point profit if it gets up towards that level. The time frame is the personal preference, and we have stops just in case, of course, the market disagrees with it. But we consider the trend innocent till proven guilty. It proves us guilty if the pattern, if the definition of the trend, the definition of uptrend is no longer valid. So if it makes, if it runs up and breaks out and we buy it and then it comes back down and makes a lower low, well, the definition of the uptrend is no longer valid. So why on earth would we want to hold it? Anyways, I hope everyone has a good long weekend, safe long weekend, and if you're looking for something good to read, look at Technical Analysis Using Multiple Time Frames by yours truly. Have a good weekend. Thanks.